So after 3 months, I kind of came up with something new. So this time I combined AI with finance. It's a new project. I just keep moving from project to project. I don't know. For like that might be interesting for a little while. Now I'm again like, not sure. But yeah, so I combined AI with finance to kind of see like how well does it do. Like if you like on the market all the time and you read the news and you kind of like get an idea or like multiple perspectives, you kind of can come up with your own strategies and stuff. But or where the markets are heading and all of those things. But AI, let's see how AI does it. So like if you give AI market data, like how well is it actually doing? So let's have a look. So here is Aucek. It's already online. And then we can have a look. So I put some categories on the right side to not have it completely bare, but technically you can just use the chat. So overall, like, yeah, the news AI is kind of like, I guess, good in classifying whether or not something is bullish or bearish. So in that sense, I guess it's good. Can't really like say like it did something wrong here. If it's bearish, it can tell you whether it's bearish, or if it's bullish for a sector, it can tell you whether it's bullish for something, right? So it's good in identifying the sentiment around something, or like whether or not like something is actually good for that sector, or the recent news. And let's go into the next one. So far, if you compare AI with like regular financial advisors or even financial sites or blogs or whatever like is out there, like I would say like it's on par. Maybe even slightly better because it gives you strategy, kind of good strategies, I think. So I think like when it comes to strategies, it is already better than any regular financial advisor, because the regular financial advisor generally just tends to like give you the same stuff that he was told to do. So like when he got told like, oh, do this or do that, or like we should be doing this, then he basically just keeps passing that on to anyone else, to the investor itself, without actually having an explanation to why they're choosing to do what they do, really. Not every financial advisor, but I think the majority at least. And here it's like nice to see. I think this is actually better than a regular financial advisor. So I would give this already like a plus to a regular financial advisor. Obviously, I created it, so but I tend to not be biased. Like if I think it's bad, then I will call it out for it, you know? So I'm not interested in saying something is good when it's not. So, but from my unbiased, even though like I created it, I would say like, yeah, no, that's definitely better. Now let's try something else. Like, no, that what I'm trying now could be done, I guess, like in various ways, but for simplicity, I think there's nothing really comparable to it. So let's say like you are someone who doesn't want to like have 10 tabs open, scan the markets, have 20 charts open, try to find the next good thing. So let's say like I want some undervalued stocks. Let's see what we get, right? So give me some good undervalued stocks with potential. Let's see what comes back. And then okay. Guess gotta fill up the account again, because it just keeps running through money. AI chat is not always the cheapest, so let me just fill that up. So let's try this again. Just take this again, start a new conversation. and see what we're getting back. So and as you can see, like it has various tools to access in order to find like, to give someone like a good answer to something. Or we'll see whether or not it's a good answer, but like it has tools available in order to find something that might be of a good answer. So what do we got? I already see like we have UPS, Lulu, what is that, like Charter, IT. So Novo Nordisk, UPS. Let's see. Oh, this is good. This is good. So UPS. Yep. That is good. Like, wow. So this is a perfect, I don't know if I want to say perfect, but this is exactly what I would be looking for if I wanted to find stocks that don't have all the media attention, that are already like super expensive, that everyone is already in, that kind of like where a looming end, or where the end is looming, where you kind of sense like, you know what, any moment that whole freaking thing can just like fall down. And you don't want to be the one that buys it at the top. No, you want to buy those things when they're at the bottom, right? Like just when Nvidia wasn't getting media attention, buying it before it actually got the attention, right? So that's at least how I generally pick my things. And it picked it too. So like it picked UPS, for example. It got a low as RSI. If you look back, it is at a good price. Like it is at a good price. It hasn't been at this price in, okay, let's see. What, even here the lowest was like 90, and now we like at what, 80, 87. So it hasn't been at this price basically since here, 2013. So in over 11, 12 years, it hasn't been at this price. Like how much better could it be price-wise, right? Like that is, wow. I like that. That was a good choice. Very good choice. Let's see. Let's have another look at Novo Nordisk. I personally don't like want to invest in anything like pharmaceutical related. But let's just go by the price itself, and damn, that went down. That went down. And it's a good reflection of the market, because those are big companies, right? And it really truly reflects how the market is actually doing. So if it were like just a handful, or like once in a while, like a bigger one, like going down, but like you can see overall the market is tending to go down with increased interest rates. Even if they want to tell you like the market is great and everything, in reality it's really just like a couple stocks that actually keep the market up. In reality, like out of the S&P 500, out of the index fund, you have like maybe 80% that are going down, 85% going down, and then like you have like 10% that carry the entire market or go up, and that's supposed to be a reflection of how the market is, which is not a true reflection, right? But despite that, just looking at it, it's definitely nice to buy it now than to having it bought anytime from here to 2022 or maybe in 2021. So like now is actually like a good time to like start like picking this up, even though personally I wouldn't want to pick this one up, but like overall, like yes, you're definitely not the one that bought it at 135 and now has to look at like plus 70% loss. So At least in the short term. We don't, over the next 5-10 years, who knows, like that might surpass it again. But like in the short term, like someone would be sitting on a paper loss right now if they haven't, or on a loss if they actually sold it. But yeah, so good choice. From technical price action itself, I think. Then Lululemon. That traded at 500 and now it's like at 200. Again, like prices that haven't been seen since the last 5 years. Very nice. Very nice. That's exactly what I want to see buying anything. I don't want to buy things when they're super expensive and everyone is already like rallying when there's hype in the market. That's generally always like when you end up either with a loss or you have to wait it out until like the market recovers. And I'm not a fan of that. I'm not a fan of waiting 5 years for something to recover. So I want to buy things when I think they are a good deal. So not in the sense that it's already like overpriced, priced in, and 20 or 30 times what it should be. And then saying, oh, there's still a reason to why it can go higher and higher. No. It's like I want something that is, it should not be this low. You know, that's what I want. This should not be so low. Or this is cheap. So yeah, then we got Centene. Definitely a big drop. Yep. You can see like definitely fell through. No, I do not know what Centene is. CNC. Let's have a look. What is CNC? But price. Okay, it's kind of busy doing that. Healthcare. Okay. 17, canteen. So again, why CNC might be undervalued, low P and PE and PB ratios, revenue growth, year-over-year growth of 17.6%, oversold RSI below 40 suggests potential for a rebound. That's all true. So it's really good also like to giving you like reasons to why something might be like no a good time to buy or not buy, which I think seems to be correct too. So like I would say that's exactly like what you would be looking at, or anyone that like would like tell you to buy or not buy, or like why you maybe not want to buy something or why you might want to buy something. So I think in that regard is pretty good too. Like the question that someone should ask themselves too, or come to the same conclusion basically. So if they look at it and be like, oh yeah, that is true. So far I think that is good and like properly gave me good reasons to why this might be good to buy, or why it might be undervalued at this moment. So no, I'm pretty happy with that. I think that's good. Let's look at IT. I saw this one before, and this is like falling like crazy. So definitely like something to watch, because this also falls in the category where it's like interesting to maybe wait a little bit longer, but keeping it like watching it, keeping an eye on it. And H&R Block, I think that's a Canadian company. Yeah, I don't know. This one is kind of like, I guess like H&R is like for financial, not financial, but tax reporting software. I think they do it even personally, but I don't know. Wouldn't necessarily be my present choice. It's also not really like at a discount. Let's put it that way. It's like pretty much at the all-time high. 63, and now it's like at 50, around 50, 49. So it's not really that far away from like its all-time high already. So Clean Spark. Is that energy? I think that's energy. Run okay. Yeah. This actually doesn't look that bad either. Definitely this notch riding up, but there's also not much happening here. So like from the entry point, in regards of entry point, I would say like, yeah, it's not bad. Now you're like at $9. Certainly was higher before. Was at 50 or even like a little bit higher for a day. A little bit. So it is a good entry point in that sense. It just doesn't move a lot. If you look, like it probably took, what is that? It's just 2020. A good year. Oh, it's actually absolutely not bad. Interesting. Only 1 year. Only 1 year for it to kind of like have moved quite something. September to, what is that, April? Interesting. What, like 6 months or something? 6 months to triple. Yeah, that's not bad. So it's not, it's not a bad choice. Maybe I'm like accustomed to more movement, but it's actually not bad in that sense. So yeah, I would say the choice it gave me was actually pretty good. Can't really complain. Obviously, like there are more. Like it's, if you have an oversight, so like if you personally scan the markets and you have a table and you can like, then you can go through each one, and then like it takes work, right? And you kind of can get similar results and maybe even like more, as if you were asking it via chat, or like you might have like a bigger oversight and it's maybe cleaner and more organized in that sense, instead of just getting like maybe 20. So like you have more to choose from, more to look through. But I would say like as a recommendation, I would think that's good. That's good. I would rather see that than like anything else that you normally see in the financial markets. In the financial markets, they're going to tell you like buy Nvidia. Wow. Thank you. I can buy something that's like overpriced, where hype is surrounding it, and where you think like any moment the house of cards gonna fall down. And I'm supposed to buy the very top, the most expensive it ever been. I don't know. Not for me. But, and that's the thing. So I would say good. That was good. We can also see like, should we buy something? So let's see how AI is what AI is saying in regards of buying something. So let's make it about Nvidia. Should I buy Nvidia right now? And let's see what AI thinks with the present market data. And I hope to see that it actually is like not telling people to jump into it. So ideally it's gonna like warn users a little bit because it's already been like it's too high in my opinion. But let's see what it says. Mm-hmm. So some company information, the RSI, which is at 50, which is supposedly neutral. As you can see, like this already went up. This is just waiting to like turn around in my opinion. I don't think there's so much more room it can go up. It's just all the money concentrated into that one stock. But eventually like it has like an exhaustion, right? Like it just doesn't move further up and then it just turns around. So in my opinion, I would not buy it, but like, let's see what AI says. So fundamentals, in regards of fundamentals, it's leading in GPU and AI computing with strong growth in data center and gaming segments. So yeah, that's a plus. So fundamentals are not bad. Then technical indicators, RSI is neutral and generally based on the moving average, it still shows a bullish trend. Then analysts say overwhelmingly it's bullish, which is fine. And then summary, so conclusion. Nvidia is a high growth stock with strong fundamentals and bullish sentiment. However, technical indicators suggest it may be overbought in the short term. If you're investing for the long term, Nvidia remains a solid choice, but consider waiting for a pullback if you're looking for a better entry point. Yes. Yes. Absolutely. Good choice. Thank you. I would not want to buy it right now. Like when it drops, when it pulls back, and I'm not talking about like a tiny one, but rather like an actually like bigger pullback, then I would like be interested in Nvidia. But at this point, I'm like, this would be high risk in my opinion. So I'm happy that the AI also told you, like, regardless of all the positive sentiment that is around it and that the technical indicator still shows that it's bullish, it also warns you in regard to buying it at this point. So this is very, very nice to see. I think that's exactly what someone should say. If someone being asked whether or not they should be doing it, whether or not they should be buying Nvidia right now, I think like that's exactly the answer that someone should receive, right? So I think that's a plus. So I don't have anything to compare to, like what are people like generally saying about Nvidia, right? Like just bye. So let's see. Should I buy Nvidia right now? So let's just see what the news says. So because they're obviously giving you something. It's not good to buy Nvidia. Mm-hmm. Okay. So it's behind a paywall. So I guess that's not going to give me an answer. Buy Nvidia stock. Okay. That's very commanding. Does it tell me why? Oh, okay. Well, it was an opinion at least. So prediction: Nvidia stock would be worth this much. Okay. That made the card could produce monster returns in the coming years. For who? For whom? Because a regular investor is not seeing that if it's already that much up. So consider the net. No. So there's no warning in it. The only warning is because like the Motley Fool Stock Advisor analyst team is telling them like it wasn't one of the top 10 stocks. And that is the reason why you shouldn't buy it. Like, that is not a good reason. Okay. No. No, this is supposed to be, what is this? In the investing section of the Globe and Mail. I don't know. I guess that's what you can expect from like newspapers. Like most newspapers or like magazines or online news are kind of like tailored in that fashion to not tell anything negative, say nothing negative. You have to like only say something positive. Yeah, no, like I don't like that. I don't like that. Okay. But this is good. I would say like it around the point here too. AI is a better financial advisor than your typical like newspaper finance section or online page in that regard. So what else can we ask for? Like so we can ask for individual stocks. We can ask for like let's ask for where the market might be heading next. Okay. Isn't that interesting to see, or let's say to kind of have an idea of what might be booming next? So based on so based on present market condition, what might be driving in the future that is presently overlooked? I think that's an interesting question. Also, it has access to institutional data through filings. But yeah, it has a lot of market data access to, which helps to give you good answers. Or we'll see if it's a good answer. I want to speak too soon. Because not always is it going to be a good answer, but overwhelmingly it seems to be, or most often than not, it seems to be giving you good answers. So let's see. What's the next? So it's talking about traditional media. So apparently institutions are kind of interested a little bit in healthcare, financial, and commodities. Okay. So they could be undervalued presently, which might be true. Or I think is true. I think the healthcare sector in general like was plummeting. So that sounds to be correct. Let's have a look. Well, this one definitely can drop a lot more. Yeah. But I think I've seen it overwhelmingly with the healthcare sector that it drops. So like I think that's correct. Then emerging markets, AI, robotics. Okay. Undervalued dividend stocks. So radio advertising has the second highest ROI globally after social media, yet it remains undervalued by marketers. I don't know. So that obviously I could ask again and I might get a slightly variance, might get different kind of like a little bit kind of a different answer maybe, or more info, or like different kind of like things to look into. Traditional media I would not really look into, although like I don't know, if they're really down then maybe yeah, because they eventually have to like adapt to, right? Like maybe something to look into. Yeah, possibly. So something to look further into maybe. Emerging markets, for sure, there can be something. So there definitely can be something. I'm not an expert on that. I still have to look into that, on how other countries doing. But yeah, I wouldn't say that that's not a bad answer. Maybe it could have been a tiny bit better. But maybe that's just the perfectionism speaking out me, where I'm like, I want the perfect answer here. But yeah, no, it's not a bad answer, that's for sure. So like I think like it's a good answer. It's all right. So yeah, that was a little look into how well AI and finance is doing together. So if you give an AI model data to financial market data, like how well is it actually like interpreting that and giving you like a good like answer? I would say it's pretty good. I think it's in some regards definitely way better than a regular financial advisor. At times it could be a little bit well, it always can be better, I guess, right? Always can be better. But yeah, it competes very strongly with financial advisors at this point. Like I think like if you get good results, like for example, like you get good undervalued opportunities, you get a good answer, not like one that fits the narrative. So like people profiting from like having Nvidia go up, and therefore like they want to tell you like buy it because they themselves are in there, or they themselves are pushing that. So you want a slightly also like contrarian viewpoint, or you don't just want one viewpoint, and I think it's good in that too. it kind of gives you like a little bit of both. So here is the reason why it might be good to buy it, but also there are some things to maybe look out for, and it seems to be good in that. So I would trust this way more than I would trust any newspaper, to be honest. And like, I don't know. I don't know. I don't want to be talking too biased, but like just what I've seen now, like I think it's pretty good. But yeah, like give it a try. It's online. Yeah, and tell me what you think. So I kind of like put this together over a few months, mostly like with the thought of like keeping it as easy as possible, because like obviously you can find opportunities yourself. Like if you do the hours after hours, you kind of like scan the markets, go through all the stocks and all of that. Like, yeah, sure, everyone can, with enough time and like interest, can do that. But like, this is basically just a chat, right? Which makes it very easy for people. So like, even the right bar, they don't even need to see that. Like a regular user might only keep it like this and ask a question, hey, what is interesting right now? You know? And I think it's pretty good in that. It's pretty good in that, and doesn't require someone to like have 20 tabs open, scan the entire market, and also going through one stock and then looking at the technical, looking at the fundamentals, then looking at the analysts' ratings, what they might say, and doing all that. Like, no, like it's just like bam, you're getting it all in one go. It's going to tell you everything you need to know. Or I think most of it. I don't know if something might be missing, but like overall, I think it's already like pretty good. Yeah, no, it's especially if someone would tell you like, and that's very interesting when people tell you like buy this or buy that. Like just throwing it through this can already give you an idea whether or not you actually should. Because people oftentimes just blindly buy something, and this is perfect for someone to not fall risk to buying something that is overpriced, is maybe not at a good time to buy right now, or is like having something else that kind of like give reasons to actually be more hesitant about buying something, because maybe the outlook is not good or whatever, right? Yeah, no, I think it's good in that too. So let me know what you think. It's online. I think it's better than a regular financial advisor, than like maybe not the super expert. So I guess like an expert in macroeconomics might still have a more accurate view of everything. No. But if you talk about regular financial advice, I think like, man, what am I asking a regular financial advisor anymore for anything? Like this is already like better than a regular financial advisor, according, in my opinion. I don't know. You check it out. You tell me what you think. Is it better? Is it worse? Do you like it? Do you don't like it? Or I don't know. Give it a try if you like to, and